The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 14th, Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the markets, what the bulls and the bears, the buyers and the sellers are doing at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. That way, the two of us, we can go take a look at the market, try to figure out both sides of the trade, and, we even get a couple eyes inside the Tiger's Den assisting you as well. So let's get this show kicked off. Again, this is Terrific Thursday. This is none other than Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 240 points, trading out at 16,394. S&P is up 30 points at 1919. NASDAQ Composite up 75 points at 4601. Russell 2000 up 12 points. So we've seen a big move, about 325, 350 points from low to high inside of the Dow futures out there. Gold is back about $10, trading at 1077. Teetering on moving from bullish to bearish, at least with regard to which side of the trade one should be on. We'll have to see how that closes at the end of the day. Silver is down 35 cents, trading at $13.81. Light sweet crude up 78 cents, trading at $31.26. Leading the charge out here dollar-wise to the upside, you've got Chipotle. That's up $29. Priceline up $21. Regeneron up $21. Google's up 14. Biogen's up 12. To the downside, stock-wise, you've got Credit Acceptance Corp, CACC, good old GM, used to be GMAC, I believe. Solar City is down $5. Credit Acceptance Corp is off $5 as well, $5.50. You have Ambarella down $4. WebMD off $4. So a number of questions that had come in since the last show out here, and I'll address each of those during the show today. Mostly it is most of it is with regard to patterns that are out inside the market. So one question with regard to A to B equals CD patterns, one with regard to consolidations. Overall, what is the market doing out here? Now, first, let's take a look at the what the market is doing on the shorter term time frame. And it was really that first not the first 45 minutes, but there was a 45-minute flurry out here that began at about 10 o'clock, 10:05 to be exact. And in that 45-minute flurry, we saw the ES Mini go from about 1870 up to about 1911. So that's a 40-point move. That was a quick move out there inside the markets. With regard to and that was in the NQ, was a big move as well. Right here, just on the short-term chart, little 5-minute chart that we have out here, off of that low, again, that came in here at 10 o'clock this morning. We can see right now that price is continuing to move higher and doing it. Again, it's only a 5-minute chart that you and I are looking at, but continuing to move higher with less relative strength. But we'll see as these candles form out here if it can bust out of that and really get some mojo going out here. My guess is yes, that it will be able to get that mojo. We're going to have one heck of a move to the upside out here. If we take a look at some of the patterns, we just took a look at a 5-minute chart inside the NQ. If we look at the 30-minute chart out here, this is the one that we looked at yesterday during the show, and the pattern that we saw out here that formed the top is the exact same pattern that formed the bottom. What I mean by that is yesterday at 4 o'clock in the morning, we saw price move up here. I'll just pull this over a little bit here, over here to the left. So off of the low that began at 2 o'clock, that was 2 o'clock in the morning on January 12th. We can see that it did what? That the NQ 30-minute chart made 7 waves to the upside, had an A to B equals C. I don't know that it completed the A to B equals CD pattern out there, but we'll come back to that. Price was moving higher, doing it with what? Less relative strength out there. Got that little bearish reversal signal here at 5 o'clock in the morning, some additional follow through, and then all holy heck broke loose at about 10 o'clock as price moved below its TAS market profile low out there. Then, since that high, what we saw take place early this morning, market opens, right? The cash market opens at 9:30. Selling ensues. And during that ensues period, moving down into about 10:05, what was formed out here? The exact same pattern up at the high, same pattern that formed down here. Now, up at the high, it gave you a chance really to get in, meaning that, you had your bearish reversal candle out here at 5 o'clock in the morning. Well, shoot, by the time that bullish reversal signal formed, completed at 10:30, that was a huge move inside of the market, because the way this pattern works, you really place your stop just one tick above or below that 7th wave move out here. Well, that's, most portfolios, most traders out there, you're not going to be able to give it that type of room. I mean, you're talking about the actual low, the tick here inside the NQ was what, 41.24, and when it was all said and done, you were up at 42.03. So what is that, like a 77-point move or so? That's a huge move. Now, that is a wide-ranging bar. That is a bullish reversal signal. There is no reason to believe that we're not going to get at least some type of retracement out here. That retracement, meaning from that high of yesterday, it's easier for me to do the retracements off of these charts here. It's easier for you to see as well. So let's go back to the NQ. Let's go back to that 7th wave move. Let's go back to that swing point out here. That swing point being right here between, it was at 4 o'clock all the way down to the low. And what you and I will notice is that not you, but the NQ is trading above, in between its 0.382 and its 0.618 retracement level. That says that we are likely to see a move, and I would anticipate we're going to see that during the day today. We're going to see a move up to 42.73. 42.72.94 would be the exact mathematical number as we take a look at the retracement levels out here. So that is at least what one should anticipate. If I try to see if there's any kind of some sideways resistance out here, some market profiles. Let me see, we've got the 30, and it's really not anything. Now, I've got what I'm displaying on my screen here are the 30, the 60, and the 240, and it is above all of those profiles out here. So really depends on what type of bar this 4272 level is attacked with. If it's hit with a wide-ranging bar, pretty good chance of what it's communicating to you is that price is going to go to the next level. These are just simply floors out here that you and I take a look at, because when you come into one area with a wide-ranging bar, chances are what the market is communicating, what either the buyers or the sellers, in this case here the buyers would be communicating, is that you're going to go up to the next floor out there. So that is what we should anticipate inside of the NQ as we speak. It doesn't look like there is anything that I can see that's getting in the way of the bulls continuing to move to the upside. Does that mean that the move lower is over and done with? Well, I don't know. Why don't we go answer that question? We'll take a look at a couple AB equals CD patterns out there and anything else that you'd like. Just give us a holler, 877-927-6648. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 242, S&P is up 30. So back to the market overall, what it's doing, questions about consolidations, AB equals CD patterns, and so forth. And what we're going to do is we're going to start by taking a look at the monthly chart here for Walmart. So if you're watching this on TigerTV, what we take a look at here is we can see that Walmart, in essence, this little blue box that I have drawn in on my screen, Walmart was basically consolidating, meaning moving sideways within a range, an upper and a lower boundary level. From about the time period of April of 2000, it finally broke out of that consolidation in May of 2012. So you had a 12-year consolidation. Now, it doesn't matter what period of time you're looking at, whether you're doing this on a monthly chart or a daily or a 5-minute chart. Consolidation patterns are important for you to recognize, because if the consolidations are low, depending on how you're trading, when I say low, narrow, from a price range standpoint, you get really chopped up out here. In this case, Walmart broke through that consolidation, broke through it with what? With a wide-ranging bar. We're not even looking at volumes at this stage. And when you break out of a consolidation level, then what happens out here is you typically have a measured move equal to or greater than the consolidation. So in the case of Walmart, we know what the consolidation level was. That gave us, in essence, our price projection area. And that price projection area there would have been about $86.10. Remember, when you break out of consolidation, what you would anticipate is your move to be equal to or greater than the consolidation. In this case here, that price projection would have been about $86.10, as I say. The actual high inside of Walmart was $90.97. But of course, you and I know that the candle is truly, the body of the candle is truly the essence of price. Those upper and lower shadows, or wicks, whichever you like to prefer to call them, are nothing more than the extreme emotion of that session. In this case here, we're looking at monthly sessions. Now, what do we know? Well, what we know right now is that price is now broken back below the bottom of that consolidation. In fact, about $63 It shows up on my chart as 63.91. We're not going to worry about being exact out here. The actual high 63.85 from September 1st, 2008. And what's occurred is that Walmart has broken back into that consolidation level. Now, if we take a look at retracements out here from low to high, we can see that we're trading right around the 0.618 retracement level, which is 60.76. We're trading at 63.13. If Walmart is unable to break back above that consolidation zone, get above, we'll call it $64. What we're more likely to see is Walmart head all the way back down to either the 0.786 retracement, 52.55, or more likely, because it's back inside that consolidating area, around 42.09. Now, why are we taking a look at that? That's an excellent question. I don't know. No, actually, I think what we're going to do is go take a look at the Dow. So let's go take a look at the monthly chart for the Dow. Now, when you take a look at this monthly chart for the Dow, there's a couple of things that we can take a look at. Let's look at the consolidation that was inside of the Dow. So between approximately the time period here, now we're going back to 1997. So from 97 all the way through about October of 2006, we saw the Dow in that same type of consolidation that you and I just looked at inside of Walmart. When price broke through that level, that said that, hey, we ought to see a price break inside of the Dow, a measured move up to about the 16,100 level is what we'll call it. And what happened? We didn't see that. We didn't see that at all. In fact, back in 2007, we know that the Dow put in a high out here, right? Got up to the 14,198 level. The most important thing really for us to take a look at out here is what happened. And this is how consolidation patterns work. Notice how when price came back, and at first it tested the consolidation level. So on January 1st, the month of January 2008, price had really just come back and tested that consolidation level. So even though price was moving off of that high, at this stage here, price was really doing what would be normal. Come back, test a level of resistance that now should become support, to see if it's support, to see if the breakout is real. So quite frankly, between the time period of January of 2008 all the way up to June of 2008, we really didn't know. We didn't know and take a look at consolidating patterns, whether that was it or not. But once price got back inside that consolidation level, that took place in July 2008, then we saw that old line of support acted as resistance. So in the case of Walmart, that also may be what's going on, in that it's going to act as resistance. And then what happens? Well, pretty simple. We see that price came all the way back to the bottom of that consolidation, which would have been about the 7,200 level. Yes, inside the Dow, it got a little bit lower than that. It got down to 64.69. It closed out at about 70. What was it? Well, actually, it was the month of February 2009 out there that pretty much closed right on that area. Now, why are we looking at that now inside of the Dow? Well, first, the Dow completed all of its work really to the upside, right? Because once price got back above that consolidation zone, we can take a look at it and say maybe there's two different, now that work may be done. Let's do this. Let's go ahead. Let me turn these things off. Let's draw the second consolidating pattern that's inside here. So the second consolidating pattern inside of the Dow is going to look like what? It's going to look like pretty much like this, right? So we know that the Dow had broken out of that consolidation. Let's put this measurement tool out here, the secondary consolidation pattern. Whoops, I've got to grab the right box out here just to make it a little bit easier, because, consolidations, you can see these at home. You don't have to have a lot of technical prowess in order to do what we're doing out here. And so if we take a look at the, whoops, let me scrunch. Scrunch, by the way, is a technical term. You probably didn't know that. It's a technical chartist term. So in this case here, once the Dow had broken out above this consolidation, which was back in March of 2013, and what I really should do here is pull this consolidation a little bit further over. So let's do this. And what you'll notice is we're using the top of that consolidation, by the way, of right around the highs here from 2007. So once price broke out of that consolidation, it still has a measured move. Sometimes you hear people give projections on where price ought to head to, and those that are still bulls in this market, are believing that the Dow is going to get up to 20,000. If you're wondering how they come up with those levels, well, all you have to do is just take a look at the consolidating pattern. Very simple pattern that's out here. Now, what you and I don't know, what we won't know with regard to this pullback out here, what you and I are going to watch, what needs to be a must-watch How about that? You try to say that 3 times out there. Probably you can. I can't do it. I was struggling just to do it 1 time in a row. But what's really going to be critical for us to be watching inside of the Dow is what happens if price pulls back, and price should pull back at this stage here, because if we take a look at trend lines, let's see, what trend line can I draw out here inside of the Dow? There's that trend line. Now, this is a monthly chart that you and I are taking a look at. We can see at this stage of the game, right now, this is what, January 14th. So it all depends on how the month of January ends. If come the end of the month, January 31st, the price inside the Dow is able to get back up above that trend line, all we will have seen is a test of the trend. That's all we will have seen. If instead on a monthly basis, on a weekly basis, I believe last week was the first weekly close below the trend line out there, and that suggests probably what is more likely to happen is the markets are going to continue to retrace lower. Well, where do you think price is going to retrace to when we just take a look at these simple patterns out here? You know the answer. It's going to come all the way back down, at least to the top of that consolidation level. And where is that at? That is back to the 2007 high out there, and that's at 14,198. We've got some additional proof of that, but let's go take a look at the SPY. Let's take a look at A to B equals CD patterns out there, and we'll look at it on the daily, the weekly, the monthly. We'll try to figure out where the SPY is headed to as well. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We were taking a look at the Dow before we went on that break, and I've got another picture of the monthly chart here for the Dow on my screen. Now, this shows really a couple different things. Number one, if we take a look at where the Dow is priced at right now, 16,431, you can see it's at the intersection of unhappy and unhealthy. What the heck does Steve-O mean by that? Well, if we just take a look at two trend lines, here's your trend line coming off of the highs. We're just simply connecting the 2000 high. We're connecting, that's the green line, the 2007 high. And we can see that that also can act as a trend line, or could have or should have acted as a trend line of support. We can see that price is trading below that. We can go ahead and see that we know that on the monthly base, the weekly base right now, that the Dow is trading below the longer term trend line. If you take a look at previous time periods, where the Dow has broken through that trend line out here, that has led to lower prices for months to come. And that's what we would anticipate here inside of the Dow. You can see that the top 14,198, the high here of 2007, that in essence is what you and I are looking at as a likely area of support. If we just simply look at horizontal trading ranges out here for the Dow, what we're also going to see is at about the 14,120 level. This is a weekly chart, by the way, that we are looking at. At 14,120, that green horizontal line on my screen is the weekly primary trading range boundary lines, horizontal trading range boundary lines. Now, why are we talking about that? Well, I don't know, just for the heck of it, because we were talking about it. But the key levels of support right now for the Dow, you can see we have both a weekly and a monthly horizontal trading range level that has held as support in the past. Those were established, by the way, because of these large dash lines. Those are the two areas where prices spent the most time over the last 21, 22, 94, 22 years, 94, yeah, 22 years out here. I just had to do that quick math in my head. So this 15,880-ish area is going to be a real key level of support. That happens to be the swing point out here from the low back in October of 2014, the old Ebola scare. So we'll see if price can hold that. If price is unable to hold that, then where price is likely headed to, that 14,120, that is all the way back to the top of 2007. But more likely, that little red dash line on my screen could also be the level where you at least see some type of intra-month push down to that level, which is 13,170. Okay, so that, now why are we even taking a look at this? Why aren't we saying, hey, the market's up, I don't know, 240 points or whatever it is to the upside? Why aren't we taking a look at that? Well, here's what you and I have to take a look at. We've got to look at reality from time every now and then. And if we take a look at reality, here's what we know. We know that the Dow, we've already covered that, broken through trend lines out there. That's important. If you take a look at the Russell 2000, the Russell 2000 at this stage here is trading right on its support. When I say right on its support, I mean right on its support of its rising trend line here from 2009. If tomorrow, this afternoon, anything can change. It can change how fast? That's right, in a heartbeat. If we see the Russell 2000 break through that level, where do we think price is going to head to? You already know the answer, right? The top of what? The top of 2007, about 856. It would just be normal. Would there be anything wrong with that? No, you'd actually want to be setting up a potential buy in that area. So price right now is trading right on that trend line. That is inside the Russell 2000. If we take a look at the NASDAQ composite, no, not so much. It's got plenty of room to run before it gets back to its trend line off those March 09 lows in the 4,100 area. So that's basically the so-called strength inside of the market. But we know inside the NASDAQ composite, what it's done, it's basically done what? It's done an entire measured move out here, by being able to get back to its highs from 2000. Is it going to hold the market up altogether on its own? Probably not. Probably not. Probably price is going to pull back, into that 4,100-ish type level out here. But you've got the Dow below its rising trend line, the Russell kind of sitting right on it. The transports are below it. That's the first time last week or this week. last week was the first time that the transports actually broke. Now, what the transports did out here, by the way, folks, is the transports completed their consolidation, their measured move when it got up into the 9,000 area. It got up a little bit above that, but you can see that consolidation pattern, those blue lines on my screen out here, that it fulfilled its objective. It's now below its trend line. And what you should anticipate with regard to the transports, again, you and I, we're taking a look at the bigger picture out here, but we're looking at these, by the way, we're looking at these consolidations that you and I are looking at. They work on everything, all time frames. Oh, sure. You don't believe me? Well, here's the 30-minute chart here for the Russell 2000. What was it doing yesterday? Here's its consolidation. We're looking at a 30-minute chart. Was consolidating between about January 8th through yesterday at what time? Through yesterday at about 1 o'clock in the afternoon. Boom, it broke through it. If we were going to take a look at that measured move, I mean, you can see that visually. You can see it went ahead and it made that measured move to the downside out there. So, again, it works on everything. You want to be able to spot those consolidation levels out here. But the other reason that we're taking look at these long-term New York Stock Exchange, what do we know? It's now back below, in essence, it's I don't know why it's at 10,078. Why do I even have there? But here's the deal. It's back below its trend line. That's not good. And it's this way around the world. That's why we're taking a look at it. Now, the DAX is pretty strong. The DAX is strong from the standpoint that it is just being able to bump up against and find support at a shorter-term trend line. That's one off of September in 2011. That's that little red dash line. But if price falls through that, price is going to move down to that intersection of happy and maybe unhealthy by getting back to where? The top of its 2008, 2007 swing point in the 81.36 level. So that's what you want to be watching inside the DAX, is that trend line. We can see that it still has more to move to the upside. It's measured move of about 13,821. But we take a look at the FTSE below its trend line. That's that center panel. The Shanghai well below its trend line. The Hang Seng well below its trend line out here. The Nikkei now below its trend line. The NDX is not at this stage again, but you can see we've got index after index after index that is below its trend line out there. Now, there was questions about A to B equals CD patterns inside of the S&P 500, or inside the SPY was the specific question. So let's go take a look at the SPY, and we'll take a look at a number of different tools out here. Here, by the way, are your primary and or your horizontal trading ranges, both monthly and weekly. As we take a look at the SPYs, we can see prices sitting right at about 192.17 is where we're priced at. 192.26. Remember, the body of the candle is the essence of price out here. You can see that price is right up against support using its weekly horizontal trading range. So this 192 area is very important out here. If we see a close towards the low of the session of the week, that would be, I got to just turn on my window out here, that would be somewhere around 187. You're going to be back below an important level of support. And yeah, one could say, hey, you've got a weekly hammer, is what it looks like to me. That's not a hammer, but you got a weekly bullish engulfing that says that support is at the bottom of that week of October 13th. So it'd say your price projection inside the SPY is 181 to about the 172 more likely out here. Now, this is a weekly chart that you and I are looking at. Now, on this weekly chart, let me do this. Let's do this because we just went through this whole process of consolidations. And what pattern is it that stands out at you? Oh, I gave that away, didn't I? When we come back from this break, you do it on your chart, I'll do it on my chart, and let's see if we come up with the same price projection as to where the SPY is headed to. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 261. We were taking a look at the SPY before we went to that break. We've been looking at these consolidation patterns out here. That way it becomes easy for you to take a look at a stock chart and try to figure out what pattern might be in play out there. And again, when we take a look at these consolidating patterns, we can use the body of the candle. We can use the upper and lower wicks, or whatever we want. If we take a look at the SPYs right here, what we can see is you can go back, in essence, since February of 2014. We're almost to February of 2016. So for 2 solid years, the SPY has been in a consolidation pattern. Now, it's a nice, large consolidation pattern out here, the bottom of which is about 182, the top of which is 213. That says, in fact, if the SPYs get down into that 182 level, that would actually be a nice place to go ahead and play some type of counter trend rally or a bottom. Now, I think not the But, well, we just have to take a look at everything else that's going on at that time out here. But here's the deal. What we want to take a look at is what happens if, in fact, the SPYs break through that level. If the SPYs break through that level out here, all we have to do is just take our consolidation box to the bottom, and then we can figure out exactly what that price projection is. That price projection, by the way, about 151.81. Now, we've been taking a look at those highs from 2007, and if we take a look at the highs from 2007, you're going to see that's about 157.52. So here's your price projection if, in fact, the SPYs break through these lows here from October of 2013, from the August of 2015 standpoint. And if those lows aren't broken, guess what? we're still in some type of consolidating pattern out there. But if they are, that is probably your point at which, because we're looking at weekly and monthly charts, to be, out of the market altogether, because you don't want to ride this down into the 151 and 157. You want to be able to go ahead and load up and buy that level out there. Remember, we look, these consolidations, they work the same way almost all the time. Now, to the daily chart out here, somebody would say, if you take a look at that SPY, is there a to B equals CD pattern? And the answer is no, I don't see one. What I see here on a longer term time frame, a weekly, on a monthly chart, is I just see that consolidation pattern. That's the one that sticks out at me. That's the easiest for everybody to view and to see out here. But if we do change this to a daily time frame, there are potential A to B equals CD patterns out here. In fact, the A to B equals CD pattern inside of the SPY that I see out here, and we'll take a look at the long one, the larger one, long one. What the heck's that mean? The larger one. If we take the A point that I would use here, there's a couple that you can create. But let's take a look at the maximum. The maximum would say, go ahead and use the swing point high from November 3rd. That would be your A point. Then you come down here, and as your B point, you're going to use December 18th. And then as your C point, you're going to go up here to December 29th out there. And what we can see is inside of the SPY, thus far, it's made a 1 to 1.618 A to B equals CD. As price inside the SPY was getting down to the 1-to-1 level, that's 195, it was gapping down into it. Wide-ranging bar. What's that say? You go to the next level. Where's the next level? 192.74. Price gets down there. You see any kind of bullish signal there? The answer is no, you don't. What's price do? Price yesterday gets right down to that next level. What's that next level? 188.65. And what does it do it with? A wide-ranging bar. When we just took a look at retracements in the beginning, we said, hey, not that we said, we show when price moves into an area with a wide-ranging bar, what does it tell you? It tells you likely price is going to go, you got to qualify just a slight bit out there, but price is likely going to go to the next level. Where's the next level in the A to B equals CD to the downside inside of the SPY? Gets you the 1 to 2 level, 184.13. Where does 184.13 take us to approximately? Well, guess what? It takes us back to the October 2014 low. It takes us back to the August 2014 low out here. It takes us right back to the top of what? Of that consolidating pattern. Where do you think the SPY is headed to? Yeah, it's likely headed to the top of that consolidation. And when price gets back to that consolidation level, then we'll try to figure out what is going on. So I hope that helps you with regard. I hope I answered all those questions with regard to A to B equals CDs, consolidation levels, long term, where things are headed to. Short term, you and I took a look at that on the short term, right? And on the short term, we were taking a look at those 5-minute chart. We looked at a 30-minute chart. We looked at a 5-minute chart for the NQ, and voila, guess what we have out here on that 5-minute chart? 5-minute chart, we've got price finally got up, made that 7th wave, so we got a 7th inning stretch candle that formed out here. We had price moving higher, doing it with less relative weakness. We'll see what happens with the NQ. We're not going to see it here during the next 13 minutes or so, but can price hold that little 5-minute TAS market profile up? Price is going to come down and test it. That's 42.48. You're at 42.54. You're probably saying, Steve, anybody can make a 6-point decision like that. That price is going to come down there and test it. Well, I don't know. Did you say that? I'm saying that. It's going to get down there, and it's going to test 42.48.70. Yeah, somewhere right around there. And if it gets back below that level, and if we see the next market profile low that gets formed, and if we see that form below 42.34, you're going to see an even further pullback today. Doesn't mean it's going to give up all the gains and things. No, not necessarily. But we can, this is a natural point here for price to fall. This is just a 5-minute chart. And if you're going to trade the 5-minute chart, you really need to stay within that 5-minute chart as well out there. Had a question to go take a look at, a request to go take a look at Goldilocks. And so we'll do that. We'll take a look at gold. We'll take a look at a couple of miners out here. I believe the two miners were Franco, Nevada, if I'm not mistaken. Where is that? So many comments in the den. I think it's Franco, Nevada, and AEM. There we go. So let's take a look at those two stocks first. Then we'll take, no, we can't do that. We got to take a look at gold first. So what's gold? Gold is back at 1071.80. Gold is in nasty territory. What did I write there? 1079.35. If you don't see gold close above 1079.35 today and you're long gold or the miners, then Stevie says get out of those trades. Hopefully you've got some money. Hopefully you're in the green on those trades. And I don't care whether you're in the green. I mean, I do care. I want you to be in the green. But it doesn't matter whether you are in the green or you are in the red. If gold closes below that 1079.35, the signal is protect your assets out there. And that's really what it's all about. We can see here, that's a little trend line, an interesting trend line that gold is back down below. But that's taking all the way back into January of 2015. And it is perplexing to me as well, because what I do know is that unless there's some new levels that are being set, which is possible with regard to levels of what the commercial traders are doing inside of gold, they're betting on, I say betting, they've taken the position that gold's going to go higher. But man, at this stage here, I say you get below 1079, what was it, 35, you're best to just be flat. Flat is a trade out here. But if we do take a look at gold, if we try to find some market profiles out here, let's go see what those have in store for us. So those that are a little bit more aggressive, then you stay the course until you see gold close below 1060.10 out there. That is the weekly TAS market profile. You've got the daily point of control. That's at 1067.80. The daily bottom of the box at 1062 should be good support there. You break through that, you're going back to the lows. Maybe you're going further. I don't know. But at this stage here, gold is trading below a very important level that is kind of like your go, no-go range. I don't know where it's going to close today, but if it does close below that level, it's saying Jane Curtin out there. So when we get back from this break, let's go take a look at Franco-Nevada, FNV, and see what it has up its sleeves out here. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We were just about to take a look at Franco-Nevada. FNV is the ticker symbol. We can see as it was making a high out here on October 29th, it was pushing higher, was doing it with less relative strength. It has since backed off since then. It's trading into an area here where it has found support in the past. The question is it going to find support out here again? That's at about the 45.30-ish level. You're trading at 45.67 right now. The swing point that it's dealing with, that it's moving back into, is the trading day of December 17th. That's got 827,000 shares. You're into it with 707. There was a bit of a breakout here. It wasn't wide price spread, but there was some good volume on the trading day of December 18th. I don't know what the deal was there. There were 2 million shares. It looks to me like Franco-Nevada should be able to hold support here, and it's going to be a good test as to whether or not it can. You've got the lows we were looking at. You've got this volume from December 18th. You've got a TAS daily market profile. If you see a close today or anytime, I would say below that swing point from December 17th, that low of 44.79, Franco-Nevada is going to go ahead and make a run for the 41.52 level. It's going to go ahead and make a run for the July 24th area, which is $40.81 out there. So I'm not seeing any kind of test or rejection on light volume or anything along those lines. We're not seeing anything to float our skirt out here when we take a look at Franco-Nevada. If we take a look at Agnico Eagle, AEM is the ticker symbol. That's trading at $27.32. Let me, on my other chart application, see what we've got over there. Okay, nothing that is rearing its head there. Now, Agnico Eagle looks like it's a bit stronger than Franco-Nevada. Yet today it's pulling back with some pretty good volume, 2.6 million shares already. So it's moving lower with volume. This was after making a high out here a few days ago, 2, 4, 5 days ago with 3.5 million shares out here. So it looks like Agnico Eagle probably headed back into the 25.95. So the range here for AEM is going to be anywhere between about 24.80 to 25.95 as to where it is likely headed to. And that should take care of Goldilocks and those two mining equities for might have been Danny in Atlanta in the den. I apologize. I don't recall who actually typed it in out there. If we take a look at the entire basket of miners out here, it is not looking pretty. And when I say not looking pretty, well, you're trading into the swing point out here from September the 11th. That swing point on September 11th, that's 63 million shares. The only thing that's pretty is that you're trading into that swing point with light volume, 25 million shares as we speak right now. What does that say you're going to do? I don't know. You're going to do 40 million shares or so. But nonetheless, 40 million shares would be taking out a swing point, or maybe taking out the swing point low from November 28th. That's got 69 million shares. So the savior out here, so to speak, is going to be, hey, you're coming into swing point areas on light volume inside the entire mining sector, but that does not mean that 1262 does not get hit. And the bottom line is that if gold continues to trade lower, the GDX, Franco-Nevada, AEM, they're not going to respect any of these swing points. They're just simply going to crash through them, which is so odd because of the position that the commercial traders are taking inside of gold. So I'm going to tell you, I don't have a great feel. I do not have an overly bearish viewpoint, but it is certainly not overly bullish, and I am glad that my clients and I are out of those trades out there. But tomorrow's going to be a different day, I'm sure. Now, let's take a look at some other things that are moving inside of the markets. Light sweet crude, right? Everybody's probably talking. Well, who's not talking about light sweet crude? You and I looked at this yesterday. We looked at it the day before, and that was what? That was this bullish wedge pattern inside of light sweet crude. Where's light sweet crude headed to? Pretty simple. If it can close above the price point of $30.65, it's going to go ahead right up into that trend line. Probably $34.95. Steve Rhodes with TFNN. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.